Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about another ETF. So this ETFs I have talked about before on the section of swing trade or capital gain investing. But today we are going to talk about this XIC in terms of us trying to put it onto our portfolio for passive income investing. So XIC is this Asia Core S&P 500 is traded in TSX. It's a cap composite index ETF. So this is very common in Canada and majority of investors, they talk about it. And I have invested in it before and then I use it for capital gain before, but now I want to add it into my passive income portfolio. So let's begin by looking at overview, performance, key factors, holdings, exposure, and the literature. So all this will really help you to make a decision on whether you want to buy XIC or not. And if you want to buy it, what is making you make that decision? So that's the whole thing of this analysis. So the performance is here. So this performance is mostly hypothetical and it shows exponential upward movement and average annual growth. So that's what they were trying to show here. It shows like over time these ETFs move upward. So it might have some up and down price movement, but overall it goes upward. So it's exponentially growth. It has exponentially growth. So you can even look at the cumulative that they have, it's still the same thing. So it just goes up. So that's the return or the performance of the ETFs. So the next one will be the key factors. So the important part of the key factors is you have to check like what is the net asset under management per today or the day that you are doing the thing. So in this case, it's like $15 billion that is under management. So the exchange, the market where you can get this one is the Toronto Stock Exchange. And the name is already there, S&P, and it's on the TSX index. So number of the holding. So whenever I say like holdings, or you hear it somewhere else, like people are talking about holding. So the holding is the number of companies that make up this fund. So the number of companies that make up this fund is 219. So those are a lot of companies in one fund, and that make it more diverse. So it's more diversified so than individual stock. And maybe this is the reason why I invest in it, because it's more diversified, it's less risky than the individual stocks. So it was started in 2001. It's a long time ago, maybe 25, 40 years ago. And the asset class is equity, unit outstanding is there, and then the price as per today or the 25th yesterday is $40.61. So those are the key factors, and they are very important for you to understand these key factors before you make your decision. So you have to make your decision based on solid factors that you have checked into the data and all those stuff. So key factors are very important. Portfolio characteristics, some of these things are important. The distribution yield, so it has grown for like 237%. And the last distribution per share, so this is the amount of dividend that they pay per share every quarter. So it's 27 cents per share every quarter. And then this is the price per earnings. So that is this 20 and 34%. The trailing yield, is the 12-month trailing yield, is the TTM mean is 1.94%. So this one, the more important when you are doing the capital gain or you're doing trading, but they also important when you're investing because you can now see they have the PE ratio and the distribution is quarterly. So stuff like that. Let's move downward and see the sustainability characteristic. So this one, let's go down and see the business involved. So there are many like business involved in these things like financial, energy, and all those stuff. So the fees that you pay to manage this fund is management fees is 0.05%, which is very, very small amount. Yeah, and then the MER is 0.06%. So this one, they remove them from your dividend, and it's very negligible. So you can't really tell that they have taken that much out. Risk indicator, it indicates that is a medium, which is less risky than the individual stock holdings. So we already say that this fund has almost 200 over 219 holdings, which are companies in one fund. So we only going to look at the top 10. So when you look at the top 10 of holdings in these funds are big names, the companies that we know exist, and this one make up the top 10 holding. So if you look at these companies and you feel like it's not worth it, these companies are not really good, they're not stable, and then you might change your mind and say, oh, I'm not going to put my money into this fund. So this one is, for example, like Royal Bank of Canada, that RBC is big, one of the top five companies here in Canada. Shopify and TD, Enbridge, Brookfield, Bank of Montreal, Canadian Pacific, Kansas City Ltd, C&Q, CSU, and Bank of Nova Scotia. So this sometime when you look at these funds like ETFs from Canada, they have some sort of similarities. Like most of them are made up of financials and energy, and then small of technology and all those stuff. So they are somehow similar in a way. So, but this one is more diversified because it has more companies involved in it. Exposure breakdown. This one also is more diversified because it's not like the previous fund that we look at where there was one sector that has 50% and then the rest were getting small amount. This one is more diversified. So it's financial only take 35%. So when they make up this fund, different companies come in, right? So they are financial companies, they are energy companies, they are material companies, industrial companies, utility companies. So what I'm trying to explain now is the percentage that individual industries hold in that fund. So that's what we mean by this whole breakdown, the exposure breakdown. So like the financial section in that fund is 31%, 95%. And then the energy represent only 16% of that fund. Material represent 13%. Industrial represent 12%. Technology, like the companies, they made up 10%. Utilities, the companies that make up that fund that come from utilities is only 3%. Just as you go like that, as always disappear. So that's what we mean by exposure. Exposure, you have this fund that is made up of 200 companies. And these companies come from different sectors. So they are the ones that come from financial sector, the one that come from energy sector, the one that come from material sector. So what is the percentage that all these sectors represent? So most of these ETF in Canada, majority of them financial companies hold the highest percentage than the rest. Like for example, this one. So we have this is financial. So in that fund, there are more financial companies in that fund than the energy companies. So, and that's what we mean by exposure breakdown. The literature, you can, if you are doing this, you will have to be reading this fact sheets and semi-annual management report. All those you will be reading them for more information if you decide to invest in that fund. And that was for today. So we have looked at overview, performance, key factors, holdings, and exposure breakdown. Like as I said before, we will be looking at more ETF as we build this portfolio. So our first priority is to invest in ETF first before we start taking individual stocks, because the ETFs they are more stable and they are more diversified than the individual stocks. Okay, so thank you for watching, and I will see you next time.